Hi folks, this is Rajat Bose from Kolkata. It is 2023 and the month of January is coming to an end. That reminds us that the annual event of Union Budget is just at the doorstep. On 1st of February, the budget will be presented by our Honorable Finance Minister. So, what can we expect? What can the common investor expect, or what we have found about their desires? In my discussion with common investors, salaried people, what they are expecting is that the minimum taxable limit would be raised from 2.5 lakhs to about 5 lakhs. If that happens, that you would be saving 12,500 rupees that you would have paid as income taxes. Apart from that, no major demand on the tax front, at least from the common investor, was found. I mean, there could be a lot of other things, but now the other thing that most of the investors are expecting, that there would be some rationalization of capital gains on various class of assets. The bonds, the commodity bonds, the stocks and gold bonds, other kinds of debentures, etc. They are actually, as far as their long-term capital gains time period is concerned, equities, listed equities and listed bonds, they are charged 10% after 2 years for their long-term capital gains. Of course, you don't get any indexation benefit on them. For all other asset classes, sometimes the time period is greater, that is up to 3 years, and but they get indexation benefits, but the long-term capital gains rate is 20%. So the investors are expecting that there would be some favorable changes in the capital gains tax rate as far as the long-term capital gains are concerned. So probably we might see the finance minister coming up with some proposal to that effect. And one thing that is very favorable for investors, the government sovereign gold bond, here you get 8% interest, and after 5 years you can actually pay long-term capital gains at about only 10%, and when you can actually encash it after 5 years, and if you go up to 8 years, then you don't have to pay any capital gains tax on this. So here, of course, there may not be any rationalization, but if something were to be given, like for instance that you get if the time period of 5 years comes down to 4 years or 3 years, that would be a welcome step for that sovereign gold bond as well. Otherwise, I would tell you, as investors, think about this opportunity, that is this sovereign gold bond. It's actually a very good investable instrument. Keep that in mind compared to the normal FDs and other things. Of course, that gives you liquidity, but it is a much better thing. The other thing that you can expect in this is there would be some rationalization in tax rates. There would be some rationalization. There could be tinkering in wherever possible. That is, most of the excise duties are under GST, but for petrol, the fuels and the seen products, I really don't think that cigarettes will be cigarettes were spared last year, and cigarettes will continue to be spared for the simple reason that now, because of high taxation rate, there are lots of smuggled cigarettes that are coming into the Indian market, and thereby both the companies producing cigarettes and the government, they are losing money. So cigarettes might be spared, but on liquor and on fuel, what will happen? We need to see that. So this is the kind of scenario, and mind you, this year it is actually the final budget, final full length budget, because next year in the month of February there will be only 3 months left for the general election. So full budget is not presented at that point of time. After the election, the full budget is presented by a new government when it is formed. So this is the final this is the last full length budget. I should not be saying final, but it is the last full length budget of this current government, and that's why it is expected probably that there has been so much of thrust on infrastructure, and that thrust will be continued. First of all, infrastructure investment creates a lot of jobs. We urgently require job creation, because unemployment continues to be a sizable problem, and infrastructure creates not only jobs, infrastructure creates actually it paves the roadway for further growth in the economy. So infrastructure could well be coming into a big focus. If that is the case, then what kind of stocks? Of course, you can actually think of a lot of stocks, a lot of areas like, say, infrastructure related areas like electricity, like cement, like steel. But the problem here is that some of most of the stocks in steel or cement, they have already appreciated so much, or even for that matter the engineering companies like Larsen and Toubro, they generally tend to get a benefit out of this, but the benefit is already priced in. The prices are quite high there. Defense will be another area where our focus is now very, very strong. So I would suggest you buy Bharat Electronics. This is a company that is owned by the government. 51% is owned by the government, and rest is in the public arena. And this company produces more than 40% ROCE. This is a good company fundamentally, technically speaking. This company, just because it is a PSU, but mind you, since it is 51%, if there were to be any kind of disinvestment here, it would become a private company, and so it would command a even higher valuation. And at 99 or 100 rupees, if you buy, you have only 10% on the downside. Because 90 or 89 would be a very strong major support area for BEL, and a minimum appreciation of 25 to 30% over a period of one year or more you can expect. It can even go higher. So BEL is my second stock. Third stock, again another PSU, I would suggest Hindustan Aeronautics. It's slightly pricey, but this company is actually catering to the defense sector, and it is now an investor's darling, I would say, that a lot of people are getting into it. Buy it on any decline and hold it for long term, not just for this year. It is going to be a very good investment for any long term investor, and over a period of 1 year you can expect good amount of appreciation once things progress. Fourth stock is another infrastructure area, that is power. Here I would recommend NTPC. NTPC, again, in all of these stocks except for Hindustan Aeronautics, or even for that stock as well, your margin of safety is still there. That's why I am choosing these stocks. NTPC at current prices gives you current prices around, say, 165, 160, 165. It gives you some margin of safety and a possibility of a 20 to 25% rise over a period of 1 year could be there. So I am recommending NTPC. By the way, all of these stocks that I have recommended you, I do not have any personal positions, but my clients might have positions in them. But it isn't as if that you cannot make money at these juncture investing in them at current prices. So these are stocks that do not have much of downsides, but that they have good amount of upsides. So I suggest you get into these 4 stocks, and of course you can buy into other bonds or debentures or whatever that you get, because interest rates have gone up. So that is also another area to consider. If you have liked my presentation, please press the bell button so that you get notifications for further videos, and also like it, press the like button and subscribe to my channel, share the video to others. Thank you.